Institutional demand for Bitcoin has gone bananas. Institutions are looking at Bitcoin more than ever, and we have some number here to showcase exactly what we're talking about. So CryptoQuant.com on Twitter released this chart earlier today. It says Bitcoin under Coinbase custody for institutional clients increased 296% since Q4 20. You look at that chart, it's up and to the right from 17.072. Believe that's in billions. Yeah, the unit is billions. Of BTC up top too. And then it increases all the way up to 67. So we've seen a massive increase, nearly 300% increase over the last year or 2 years for institutional demand and custody of Bitcoin on Coinbase. I think this is a trend that we're probably going to continue to see over the foreseeable future as the asset class continues to grow. And what we've seen, we have a bunch of charts here also from the on-chain analysis side that show kind of where the Bitcoin is sitting today on exchanges versus off exchanges and so forth. So if we pull up the all exchanges Bitcoin chart, I don't know if we have that one, but we can look at that later. So if you look at what's happening in the market today, though, it's very obvious that institutional demand has continued to increase over the last few years. It's a bear market to some degree now. Asset prices have obviously pulled back more than 50% or so from the all-time high. And then if you think about it in context of institutional entrants, this is probably a pretty good time for companies or institutions that wanted to get in previously. A large percentage of the Bitcoin market is driven by institutional demand. As much as people want to hate on institutions and say you don't need them, et cetera, we see all the time like the DCA chart is up and to the right of small holders of Bitcoin. They continue to dollar cost average on an annual, daily, monthly, whatever it is basis, just doing it time over time again. Institutional demand is where you really start to see the price of Bitcoin accelerate because they're big buyers, right? They come in and they can invest billions of dollars, certainly millions of dollars or hundreds of millions of dollars, if not billions of dollars. And that demand is really what can make the price appreciate given the supply of Bitcoin is fixed or at least constrained and capped right now.
Yeah, but we saw that a little bit with the Terra and Luna stuff where they were buying billions and billions and billions of dollars of Bitcoin every single day. It moved the price a little bit upward based on sentiment, but also based on just the natural buying, supply and demand side of things, right? But institutional demand, institutions, when they come in, they're going to come in hard, right? Institutions right now, I think they have a lot of have a lot of capital sitting on the side waiting to get entrance into it. They're waiting for regulation. They're waiting for the services to be set up. I know Fidelity has a ton of institutional stuff. Coinbase has a ton of institutional stuff. So a bunch of companies are working on the institutional side and they want that demand because they're going to be the winners. And those are really the market movers. Like you can buy $10 of Bitcoin every single day all you want, but it's not really going to move the market like these big movers can, like these big market makers can. They can go ahead and they can move the price up a lot or down a lot, right? If they buy or sell and depending on what they want to do.
Yeah, I think it's naive to think that institutions were just moving on. There's certainly some momentum-based traders, and there's people that are trying to time the market and do different things around actually trading the asset. But then there's a whole other subset of institutions that believe in this asset long-term, right? And have been acquiring Bitcoin, whether it's monthly or yearly or whatever it is, but have a long-term outlook on it. And if you're one of those people that sees Bitcoin down now 60+% from the all-time high, you can go in and start to allocate more funds towards it because you know that you're buying it at a good price relative to what it was at least 6 months ago or 12 months ago. Even if you think that was overvalued to some degree, given the market cycle and the dynamics of the network, it's still a good price relative to what you were buying at previously. So whether it's dollar cost averaging or just allocating a large chunk of your capital towards it, I think what we're going to see is we've seen this cycle play out now for multiple times now, multiple halvings. And I think that the best capital allocators are looking at this as an advantage and a time to actually go buy the asset rather than run scared, rather than tell clients not to get interested or buy the asset or so forth. I think that what we'll see is when we emerge from this and we start to see the price appreciate more, there's going to be a bunch of new capital allocators and institutional investors that come out and have larger positions than they previously had in Bitcoin.
Yeah, but what do you take into account on Coinbase? The amount it increased 296% from Q4 of 2020, but we saw obviously a giant price increase in 2021. We saw those institutional demand go down, and then here you can see the balance on exchanges that you were talking about there. How it's just up and to the right, and then has a small downtick after 2020 actually.
Yeah, and look, those it crossed, right, the balance on exchange, and then the price crossed in 2018 and 2021, and now we're sitting down below what is that, 2.5 million, right? So the balance on exchanges has increased dramatically, obviously, over the last few years, but we're also down a considerable amount from what we saw at the peak in 2019, 2020. People have moved their Bitcoin off exchanges and so forth, and I think it's an interesting dynamic to continue to watch in the space because of the impact that can have on price, right? If Bitcoin is not available for sale, if people are removing Bitcoin from exchanges and doing other things with their Bitcoin, that helps, right? All you got to think about is supply and demand. And if the supply is fixed or constrained, we know there's only ever going to be 21 million, certain percentage is lost or stolen or whatever it is, new entrants into the new mining's taking place every single day, et cetera, then we're going to have this dynamic at play where if the institutions do eventually come, right? Like there's, people make fun of the saying institutions are buying Bitcoin, institutions are coming, whatever, in every single market. But I think it's obvious that that's a big point of the potential price appreciation in the asset, right? You have a core base now of people who are just DCAing every single day, whatever it is, but the institutions play a huge role. And I think people are naive to avoid that part of the conversation.